All right, so I'm going to be walking you through the new key levels of interest that I'm planning to trade at. This is going to show you step by step how I'm planning to trade the SPY heading into tomorrow. Let's get straight into how to trade the best setups at the best prices. So in terms of the overall SPY, what I want to bring awareness to, we are currently having a green, red, green pattern on the daily chart. So we have this green daily candlestick right here, red daily candlestick right here, green daily candlestick right here. If you look at the overall floor on the daily chart, it is attempting to form some support right here where previous resistance was towards this 602. Now, with that being said, these are the main points that I want to bring awareness to. So if the SPY is opening up with a gap up, it could potentially be a gap and go, but you have to be extremely careful, because we are at extremely overbought micro levels. And even if we do gap up and it is a gap and go, there's likely going to be good opportunities to buy put options and to go short on the overall market. So in terms of those main opportunities, I would focus on the upper levels. So in terms of the upper levels for put options, I would focus on, towards all-time highs. So I would look into 609 to 610.50, right around that overall zone. If you're seeing red bearish 30-minute candlestick confirmations on a gap up, you can attempt to buy puts. Now, if the SPY is gapping up and we are opening up higher than the previous closing price, 605, then in terms of one of the break and retest levels that you can consider, you can keep an eye on 605.50, man. It's just you got to be careful, man. 605.50, you can keep an eye on it. If we're reacting as support, you can try to buy call options. In terms of the next level above that, it's going to be 606.30. You guys are well aware in terms of last night's analysis, the level that I gave you to go short on the market and to buy put options was right here at the 606 level. We did end up topping today at 605.50. We missed the level by 50 cents, but in terms of the overall daily chart, there was a clear double top at a high of day retest along with red bearish 30-minute candlestick confirmation. Great reasons to buy puts, to retest this previous, support, right? Now, anyways, man, in terms of the overall situation on the gap up, I would focus on puts for the higher levels. And in terms of for calls, you can keep an eye on 605.50, but just be careful, because I'm seeing multiple things that can happen on the daily chart that can play out. And what's going to make it a little bit more hard for the bulls is we're at such overbought levels on the overall SPY. Now, in terms of a flat opening, the previous closing price is going to be make or break. If you're seeing the previous closing price, 604.85, reacting as support, forming a floor, you're going to want to be buying call options. If the SPY is having a small gap down and you're seeing the previous closing price react as a resistance, you're going to want to be buying put options, right? So if we're having a small gap up, you're seeing previous closing price react to support, flat open as well, you can buy calls. If we're having a small gap down, focus on puts towards the previous closing price, which is going to be at 604.85. Now, in terms of the overall levels below that, man, we have some previous resistance right here. The SPY has been consistently doing this throughout the past couple weeks, where it forms some resistance during the extended hours trading session, during after hours or during pre-market. It has a break above the resistance. So the resistance was right here at 602.70 to 603, had a nice breakout above the level. You guys are well aware that the make or break level was 603. Well, it clearly reacted as support, formed higher support, green, red, green, previous resistance reacting as support. And then once it started to get close to that 606 level, surely enough, the SPY started to drop. And then we had a break and retest. So you need to be paying attention towards these patterns, man. If you are seeing resistance forming in the extended hours trading session like this, and then we get a strong breakout and it comes flash crashing right back down, overreaction to the upside, overreaction to the downside, overreaction to the upside, overreaction to the downside. If you are seeing that and you're seeing 30-minute candlestick confirmations right here, 30-minute candlestick confirmations right here, break and retest, you're going to want to be buying call options. So save that overall pattern, because it's been occurring and working a lot throughout the past couple weeks, right? So in terms of some previous resistance, man, we do have some previous resistance towards 602.60. But I mean, overall, if we're gapping down and reacting bearish, the main focus is going to be on put options. In terms of levels below that, 677, there's going to be a gap that's waiting to fill below, along with previous resistance. If 677 reacts as a support level, we're going to see a strong move back up into that 605 range. So the best dip buying opportunity would be towards that 601 601 later into this week for the gap close reversal. And then in terms of, the previous levels that we spoke about, obviously very interested in buying calls at 598. Also very interested in buying calls at 594.70. Also interested in buying calls at 591 using the overall break and retest strategy when the SPY decides to drop back down to those overall levels, right? So that's going to be the main game plan, keeping it short and simple. In terms of like the overall, daily chart pattern, like I said, man, it's saying multiple potential outcomes could be setting up heading into tomorrow, and it's going to be a bit more difficult with the whole gap and go situation for calls because we're approaching overbought resistance levels. So you got to be extremely careful. Use the perfect confirmations. Be very patient, heading into the market tomorrow. Wait for the place to come to you, wait for the right prices, and wait for the perfect confirmations, right? I mean, if you're just looking at the overall green, red, green daily pattern, you can see we had it right here. SPY gapped up, and then it sold right back off, reversed at the fucking gap. And then you can see right here, we had the green, red, green pattern, and then the previous closing price reacted as support, strong bullish trend day. And then you can see we had the green, red, green pattern, small gap down, previous closing price reacted as a resistance, strong bearish trend day, right? So I'm telling you, on a flat open or a small gap up, it's likely going to be bullish as long as we're forming support. On a flat open, small gap down, it's likely going to be bearish. What's going to complicate things a bit more is if we're having a strong gap up. It's going to be a bit more complicated going long. I would focus on the oversold levels with the best confirmations. But in terms of going short, I would focus towards that all-time high range at around 609 to 610.50. 606 is make or break, man. So like I said, man, if we gap up, it's going to be a bit more difficult to be buying the call options. Make sure you're using break and retest with the perfect confirmations to be buying call options. I mean, you can see right here, resistance at 603. We drop back down, retest, green, red, green, higher support, lots of consolidation, slightly above the previous resistance, slightly above the previous break. Buy call options, sell into the rip, set the profit stops. Use that at the higher levels. So the higher levels would be 605.50. That's the new break and retest level. 606 is make or fucking break, man. It's a bit dangerous because if we do gap up, we could sell back off, right? If we're gapping up, you can focus on calls towards previous closing price as well, 604.85. So just to walk you through the overall updated ladder, 610 to 609 put zone, 606 make or break. If we gap up at some point, it is going to try to drop. But I want to get in towards upper resistance. So yeah. And then in terms of calls, if we're gapping up, 605.50 is the break and retest level. And then previous closing price, gap close reversal, 604.85. Now on a flat open, it's make or break. If you see it reacting as support and we're holding above the previous closing price, bullish trend day. If you see it reacting as a resistance and we're staying below the previous closing price and we're not really going up much above that, bearish trend day. And then if we're gapping down below 604.85, bearish trend day, buy the put options, man, right? So in my opinion, it's going to be a lot more easy to trade on an overall flat to small gap up or small gap down in terms of the opening, right? It's going to be very, very simple. Like I said, if we're just opening up flat with a small gap up, likely bullish. Opening up flat with a small gap down, likely bearish. That's how this overall pattern's setting up. It gets a little bit more complex if we're opening up with a strong gap up, but it should be easy money if it were to hit that 609.50 to 610 plus range. For puts, calls is a bit more complicated because we're towards overbought levels, and there was still some interest at 606 puts, but we already double topped and crashed from 605.50, so you got to keep that in mind as well. So just to understand, 610 to 609 put zone, 606 make or break, 605.50 break and retest, 604.45 make or break previous closing price. Next level below that is going to be 602.30 key support. Next level below that, gap close reversal, break and retest, buy call options at 601. Next levels below that for later into the week potentially, 598 break and retest, buy call options, same strategy that would have worked out today. And then next level below that, 594.7 break and retest, buy call options, and then just key support and break and retest as well in a sense towards this 591. Those are the overall levels, man. So just be a bit patient. Like I said, it's going to be a bit more tricky if we're opening up with a stronger gap up. In terms of right now, we are having a small gap down. So the easy money would be in a small gap down or a flat open, right? So small gap down puts, flat open reacting as support, calls. Big gap up. Then we're looking at puts towards the upper levels that I gave you, 609 plus. And then you can keep an eye on calls towards the 605 to 605.50. But again, if you're buying calls at the higher levels, be super fucking patient and wait for the best fucking confirmation. So that's what I have for you in terms of, a day before the market is open. If you use these levels and use this game plan, you should do absolutely phenomenal tomorrow. And again, it's an overall price ladder. You can use the information to your advantage as well. But at the end of the day, you need to be confirming if the price ladder, if the level of the price is bullish or bearish. You need to confirm that as a trader. Is it reacting as support? Is it reacting as a resistance? Is it forming bullish 30-minute candlestick confirmations or bearish 30-minute candlestick confirmations? Like in terms of the overall read to the market, you were well aware the only level I wanted to go short and buy puts was at 606. And the high of day was at 605.50. So it's off by 50 cents. But the point is, within that overall range and zone, there's more downside than upside. And I was on the right side of the overall move for the puts, right? And then in terms of calls, if you're seeing, I told you 603 was the make or break level. This was the level 603.50. I told you, if it reacts as a resistance, you can clearly see right here, this is fucking resistance, is going to drop to 600. If it reacts as support, it's going to spike to 606. It's a 3-point bracket, right? So if you were just to compare right here how it fucking reacted, this is resistance, right? A fucking roof in a sell-off. And then you can see right here, it's trying to form support. There's a breakout. And would you look at that? As it's breaking out, it's retesting this previous resistance, which is bullish. You see how it's forming a higher floor, a higher floor, a higher floor, a higher floor. This looks like resistance. You see how the wicks are at the fucking top facing down? You see how the wicks are at the bottom facing up? This is bullish. This is bearish. So in the pre-market, you should have fucking saw this and you should have said, the SPY is breaking above 603. That's bullish. The next level is 606. So if you see a retest with a floor, this is bullish. This is a fucking floor. When the 30-minute candlestick closed like this, I told everyone in the chat, it's fucking bullish, man. It was bullish because it formed this fucking wick. And it had the breakout and retest. Now it's going to try to break above this overall roof, right? And then it goes to 606. You sell the fucking move, right? And then you can see you had another break and retest with the same fucking candlestick. It just kept on doing that same fucking pattern all day in terms of call options. And it kept on topping out at the level I fucking gave you for put options. If you've been studying the overall videos, the levels I've been giving you for puts are the best fucking levels possible. I've been leading you in 100% the right direction to be buying puts at the most overbought levels. Every single fucking time it's been hitting the level for puts, the market has been having its pullbacks and its overall bullish market, man. So, like I said, man, the easy money for puts would be above 609 to 610. 606 is now make or break. So since we already practically double topped from 606, it's now make or break. It's no longer just get in on fucking puts, easy money like it was today with the analysis I gave you yesterday, right? That's the overall ladder. Use this information to profit heading into the market tomorrow. In terms of today, this wasn't our best day. The market was extremely slow. It was extremely choppy. Found it very, very difficult and boring in a sense to overall be trading. In terms of my own trades, I had 2 L's on the day and then I called it. So yeah, it wasn't really our best day collectively, but I'm telling you, man, we're going to be starting off very, very hot into this week, man. We're just getting fucking warmed up and we're just getting fucking started. So for those of you who are serious about trading alongside us, is going to be the first link down below within the description. You gain access to all of our real-time zero-date options trading alerts. You gain access to our secure private organization, our community. Within the chat is the first link down below in the description. If you want to trade alongside us, gain access to our community, and gain access to a real-time zero-date options trading alert system. With that being said, I'm going to be signing the fuck off. You guys let me know in terms of how you do using this overall information. And again, make sure you confirm the overall, prices. Is it confirmed bullish or bearish? Again, I'm giving you the best levels possible to be trading at. If you trade at these levels, you should be doing very, very well if you're using confirmations. Some of the levels have a strategy. Some of the levels don't have a strategy. So if there's no fucking strategy, you just have to use the confirmation in that particular sense. But regardless, even if there's a bullish or bearish strategy, you still have to use the confirmation because there could be a bullish strategy, but the level can be having a bearish reaction. And then you might want to buy puts or you just sit on the sidelines because you don't want to go against the overall strategy. Some levels have 2 strategies, like a make or break or something like that, right? But anyways, that's the overall game plan. That's the overall levels. We're going to fucking crush it tomorrow, man. If you'd like to join us, it's the first link down below within the description. With that being said, I'm going to be signing off.